Hey guys, this is FOMO Nomo from Telegram. Stephen Buis, also Happy Profits. We're just slowly getting that up and going. We do have a lot of alerts if you want to ring out and find out what they are. They're basically gainers list that goes up and down. It also tells you when the red candle is the most volume of it possibly going down for a short, and then also just gainers list on the way up if it's gaining 30 and higher percentages. Also when it's around VWAP, when it's reclaimed VWAP, all in one alert. So we're giving it away free for a little bit, but then we have to charge because we have a lot of data charges. We've been experimenting with this with a couple traders, and we have a lot of happy people. I'm happy. That's the only one I use now. I do use Webull gainers, but I have to look at the list changing, where this one's telling me on Telegram, like if I'm out and about, boom, this. Doesn't mean I'm going to trade it immediately. It just means I should look at it and see if it re-breaks. So if you get a 30% alert and then you get a 70% alert, well, you missed 40% of that when you could have had it because you had the alert of that percentage. And then if it regained properly, then hopefully you should have gotten somewhere maybe a little earlier. And then if it goes to 100%, you possibly mixed 70%. And all you needed was an alert service that is very cheap by the end of the day, because I think in one trade you'll pay for a whole year. So my focus today is going to be basically is when to get out of a trade. So what I'm going to do is I'm going to come over here, cut a white section of the board, and say when to get out of a trade. So I'm going to focus on that and get my mug out of here. All right, so right here, when to get out of a trade. So there's a couple ways to look at it. Obviously, I think when you're entering a trade, like let's say you're entering a trade, well, you should know your exit, whether it's positive or negative. So you're going, well, what is it? What's positive and what's negative? So you're going to sit there and go, you know, if I'm sitting here and it's not going the way I want it to, I need to know which way it's getting in. So if I get in, and then I'm actually in a position, it'll change colors. It'll usually come up here, and on my platform it just happens to be, well, it'll change to this, and then these just happen to be red. And then basically right here, I'm just going to do this real quick, and there's your stop loss. So basically I'm going to show you what I personally do. So I'm going to go over a couple shapes for you, and here's the stock going up. Breaks here, say it doesn't hit it, let's just be mean, and then it finally hits it. So two things, begrudgingly, maybe it didn't hit this, and let me just tell you, on Webull you could grab this trade and lower it down and just say, hey, it's plenty enough for me. Basically you have buyers pushing it up, buyers pushing it up one more time, and then now they're just not. So at what point do you take profit, or you just call it quits in this trade? So hopefully you didn't let it go that far, because basically you're going to enter a short here, or you're going to enter a short here. This is basically a head and shoulders, goes over there, tries to push through price here. If you're going to notice, this is probably going to be a support and resistance area. This stock is going to go up and bounce, and then say, okay, we have enough, but not enough. That might be a 40-cent move. Take the 40-cent move. And then right out here, it's going to bounce and test that same previous area and also the resistance, and it did not find support because it didn't stay above it. And then you go right here, well, sadly, here's a break even because you didn't want to take your profit. And then right here is where maybe a short is going to add, because they're going to add at this right here, and they're going to add at that position and keep going down. So if you know the shorts are looking to enter here, or maybe even at the top, if they're super aggressive, when the stock is kind of overextended, you actually kind of see the whole arc of this stock eventually. What you're going to do is you're going to have to see these points that if they're not going up, then all they could be doing is now going down. And that's where shorts are adding. And that is when we're taking trades. Or if you're aggressive, you can buy the dips as they're going up, and they're buying the tops as it's going down. So just a couple ways to look at it. But the biggest thing right here is if you enter a trade here and you miss this trade, well, no big deal. It could have grabbed you here. So that was actually support for a little bit. So let me draw that support real quick. That was support. Went over, broke resistance. Okay, found support finally, and then it started going back up. And it didn't go all the way there, but it did make the move, and right here you could have taken a profit here. But like I said, if you miss this trade, some people are aggressive and you could have got in here. Some people like a little more proof, like myself. I like a little more proof. I'm still buying some of the tops sometimes. If I see some other move, I'll get in a little earlier, which you probably would have seen one somewhere in here like that. That's the real trade. And eventually you got to sit there and go, okay, now I'm in this trade. So what am I doing with this trade? So I'm going to get rid of this. So now I've entered this trade right here. Hell or high water, I'm going to make some money. But again, let's just say your target was here, maybe target one was here, but you're saying I want 2 to 1. And let's just say it misses it by a couple pennies. And then you're stubborn and you see it going down. You see it going down. Now you've already missed your break-even point and you just don't see it coming back. Well, at what point do you call it quits? I will tell you personally, if I entered a stock here, initially this would have been my stop loss. Now the stock's going up. This is going to be my stop loss, the nearest low. Let's say it goes up a little bit more and you start seeing it go up, maybe then you should slide it up to one of these two as your stop loss. Always the nearest low is good. And then, yes, if it goes up and it stops you out, all good. Or if you're just going, damn it, let me take my money, take the stop loss here. So I've dragged up the stop loss and I've dragged down the take profit and eventually wedged in a stock like this. And when it's in an indecision, now let's just say it taps me out and keeps going up. Well, I don't care. I just made this. And you're sitting there going, well, now I missed this. Well, good luck every time. It's not going to happen every time. The market's not going to willing to pay more because look, it's already paid more. It's already paid more here and it's already paid more here. But you got to know when to call it quits. So basically, after a while, this is obviously the pattern you want to see. They all come in different shapes and sizes. But eventually, if they are going under the nearest lows, I just don't think it's going to go. It might shake someone out and do this at the nearest lows. So you might hate me if you got out here. But the way I look at it is if it started going down right here at the nearest low that was here, you could cuss me out because, well, first of all, you didn't have to eat this. And then the worst case scenario, you could just get right back in here at that area. Or even here. So you wouldn't have been cussing me out because you would have got out and you would have got back in. Now that's two trades, too sad, too bad, so sad, but also it could just keep on trailing down. So if you're eating more losses, that's called cutting the losses quicker. Because if a stock is doing this, what do you think is proof for a short person that's shorting it? That's proof that it's going down lower. What's proof? That's proof right here that it's going lower. So all about it is just cutting losses quicker, stuff like that, because basically if a stock's going down, it's showing you it's going down. And if you are still staying in past another low one more time, get out. Let's say you got out here later, a lot later than maybe you should have, and you cuss me out, and you go, oh, now look at, oh my God, oh. And it just keeps on going down. So you won't cuss me out because eventually what you're going to do is the worst case scenario, it goes back to right where you said, and then it proves itself to go back up. So either way, you'd have been fine because you would have got out early, didn't have to eat the anguish, and then you could have got in when it actually proved itself going up. So that's just my suggestions on stop losses, also exit points, and also just when to call it quits when it's going down. So that's all I'm going to help you with today. I hope y'all have a great day. Thank you so much.